as usual, if you got any questions, got anything you want to backtest, you can put them up in the chat. We can go over them. We'll wait a couple more minutes to start with the other stuff, but got a few topics I want to cover regarding the morning session stuff that I talked about in the stream, which is uploaded to YouTube vids if you've not watched it already. But we'll cover today's morning session, a couple of the other morning sessions from past week or so, and then kind of some tips and tricks to look for in the AM session, kind of as a complement towards the AM guide that was released last week or 2 weeks ago, one of the two. Trying to scroll through my notes here to see if there's anything. Okay. Oh yeah, so if you got anything, put them up in the chat. Feel free, ask questions, anything like that. But we'll just cover the morning session today. So nice overall post CPI kind of trading day. We got the nice downside movement, taking out the buy side, dumping down nice 200 points, and then able to capture 2 longs going into the rest of the morning session. But almost perfect delivery there after 9:30. If you were on the stream, you know probably what I'm about to say, but there is going to be, we'll just get right into it. So there's going to be a market maker model every single morning. Okay, either starting at 8:30, starting at 9:30, or starting at 10 o'clock. Now you can use news drivers to determine which one is which, but there's going to be a market maker model. It's either going to continue from pre-market, or it's going to reverse and attack kind of whatever was going on in the middle. But what I do is you want to mark out this kind of layout was given to me by Elijah Pips and Market Maker Turbo. So they do a lot of stuff with this kind of morning session. So a lot of these ideas are revolved around their work. But me and him were on a call, and he was just showing me this kind of backtesting stuff. But I'm going to show you guys pictures from the past 2 weeks, and we'll go over what these AM sessions look like. But you want to split it up basically into these sections here between 8:30 and 9:30, 9:30 and 10, and then 10 o'clock and 11. Now, occasionally we'll have the 10:30 marked out as well, but it's dependent on whatever your true open is. So if 8:30 is your true open, you're going to be really trading up until 10:30. That's when your highest probability trade setups are going to happen between 8:30 and 10:30. And then on a 9:30 true open, we're going to use 9:30 to 11 o'clock. Now, there's really only 3 points of interest, 3 macros that I'm looking at each day. That'd be your 8:50, 9:50, and this 10:30, 10:45 London close sweet spot. Occasionally, this macro at the end will play out, but the days where it does, there's normally a move that happens before that's higher probability. But the model includes a liquidity sweep and basically just a market maker model after that. So it's simple, but it's easier said than done for sure. How do you know your true open? So for me, I like to just use the economic calendar. You can go over here. There's an indicator by 2 degrees that you can use that shows up the economic calendar right here, or you can just go to Forex Factory. Either one works. So days that we have 8:30 news, you're going to use 8:30 as your true open. Days that you have no news, 9:30 is your true open, and then days you have 10 o'clock news, you're still going to use 9:30 as your true open, but I like to use 10 o'clock and kind of push it back after 10 o'clock. But if we're looking here, so first you're going to be looking for a liquidity sweep, and the way you classify liquidity sweep is by first understanding what liquidity sweeps look like. So a true stop hunt and stop raid will exclusively have wicks below or above a sell side or buy side liquidity pool, and the candle buys are closing very similar to this. Okay, so if you see here, we have 9:30 open right here, right? We're dipping down. We have sell side liquidity right here. Obviously, buy side all the way up here, but extend this out. There's our liquidity sweep. right? Nice wicks and candle buys closing right exactly where that sell side liquidity pool is. Now, what I like to do is we're going to be looking for the liquidity sweep at 8:30, 9:30, 10. And I like to use the 15 and the 5, which is what Elijah Pips uses when we're looking for that liquidity sweep, because typically it's easier to spot. You're expecting the same kind of candle closure here where we have relative equal lows, something like that. Relative equal lows, dips below, sweeps it out, and then closes back above the sell side there. Same thing here. If we have buy side like this, you want to see it sweep it and then close back below. But looking for that at specific times, let me drop to 5 minute. Then we're looking for a change in state on the 5 minute. So typically you're going to be using the 950 or the 1030 as your entry point, but looking for that super liquidity and then a confirmation of a 5 minute breaker preferably. So we climb up here. This is your last up closing candle range. You see the low, high, lower low that's formed. So that's your breaker. Extend that out. And typically as we tap back into it, you're going to pair it with a lower time frame for your value gap. And then target your original consolidation or whatever your market maker buy model is. Liquidity sweep is a turtle soup. Yep. So that's how you classify it. Why do we consolidate at CE of news fair value gap? I expected a more impulsive move, almost like we created a 15-minute order block. This was, so obviously with these larger moves, these larger fair value gaps, we're going to be anticipating, we split this in half, anticipating a move up to 50%, even 25% and 75%. But if we're truly bearish for the week, we may actually leave this portion unfilled, but consolidation at the top, if you take the discount to premium ups, the full dealing range from London high down to here becomes a little bit more obvious why we're consolidating, right? We're at 50% of a higher time frame dealing range. So this is expected. You want to see normally a Judas swing above and then remaining bearish, but that is one reason why we're consolidating. If you zoom out, you'll see it. Will this be posted on YouTube? Yeah, it will. It's recorded right now, and then I'll post it to YouTube after. But yeah, it's basically just a 15-minute, 5-minute liquidity sweep at time. And then you're going to use the macros as an entry towards the drawn liquidity. So if I pull up my Notion here, we're going to go and kind of cycle through. You're going to have to re-click on the stream recording. But click on this. Yeah, no problem. I'll send the link out as soon as it's done rendering. Should be by tonight. So if you go over here, I don't know if you can see it. Everyone see it? I hope. Oh, let me switch it on my recording software too really quickly. Okay, sweet. All right, so the past 2 weeks or so, price action, and there's a model every single day just using that data. What weekly profile are we expecting this week? With how much news we have this week, I'm not entirely sure, to be honest. We're going to wait for probably tomorrow morning to know, or at least by tomorrow after the AM session, we should know weekly profile. We don't have news next week, so it could just be a classic expansion. That's what I'm watching. But going to here is yesterday's. Okay, so we zoom in. This is a 15-minute chart. So as soon as we have no 8:30 news, so what are we going to look for? 9:30 as our true open, right? Now this is a Monday, so it's going to be low probability, but we're looking for that liquidity sweep at time and then a confirmation on the lower time frame. So if you look here, we have pre-market liquidity in the form of sell side here and sell side at London, right? 9:30, 15-minute candle, purges liquidity and closes back above, right? We do also sweep high here. It is important to notice that. Don't want to just disregard that kind of sweep of both sides. So it is going to be difficult on a Monday, but that being said, it's still a chance to get in. Now, on a 9:30 true open day, we're going to be looking at the 9:50 and 10:30 kind of macros, right? So if 9:50 is consolidating, or if the drawn liquidity, or if there's a reason why drawn liquidity is met, or if there's a reason why the macro will consolidate or maybe not move, then we'll just transition over to the 10:30 macro. So if we look here, here's your 5 minute, a little bit more obvious. We got that super liquidity closes all the way back bullish above the the breaker, if you will. Cycle over to the 1 minute, and now you can see on the 5 minute, right, here's your market maker buy model. Very similar to what we saw today, except we just didn't have a spike down from 830. So here's your pre-market relative equal highs, super liquidity. Now with this liquidity sweep, if you're familiar with the 2022 model or just how market maker models are supposed to work, your liquidity sweep reversal point is going to be where your stop is placed on your low risk entries, right? So we don't want to see a purge of that low or high, whatever liquidity sweep is, ever in the day until the draw on liquidity is met. So if we're getting in low risk or even entering during the macro time, we need to understand that our stop either has to be here or be respecting the repeated raise above that low. So look at the 1 minute here. Buy side from the previous chart up there on the black line. And you can see the 950 macro was consolidating. I took a loss here on stream, but it was consolidating in here. You can see the low was never taken out. We had one last stop rod. And then if you look between 1030 and 1045, eventually we take out another sweep of stops. And if you look here, here's your swing low. Candles come down, purge liquidity. And you see the candle buy staying above that liquidity sweep, right? So there's your purge. Trades back up, respects the order block there, comes up again, trades back down, and then we have our 1030 entry point towards the draw on liquidity. So you can keep doing this over and over. If you look at different days, here's a day where here's another 830 news day. Yeah, we can use this. 830 news. Here's your 15-minute chart. 930 purges liquidity, closes above. So that's your liquidity sweep we're targeting. Where's our 5-minute also closes above, right? Draw liquidity up here, complete the market maker buy model, and you can see it more obvious here. And then we do have an 850 macro trade. You can be shorting this towards the 930 open, but I'll give you tips and tricks on how to use this macro later. But you can see nice expansion up, 950 macro trade, trades up, and then eventually draw liquidity is met by 1030, which is expected when we're looking at an 830 open, right? 830 to 1030 on an 830 open, and then 930 to 11. So you can see here, draw liquidity. If you take a line, draw this up, met it, reaches it there. And if you look at today, draw liquidity met right here at 930. It also digs into the premium end of the dealing range, right? So time is very important, right? If you look at a day with no news, actually, let's go. I'm trying to find one where. Here's an example where we have an 830 news again, and we purge liquidity here. Okay, so we see a purge, closes back above. Now, if you kind of just imagine you can't see any of this and just drag it over like that, kind of, right? You can see the relative highs, maybe the somewhere in reversal, first stage, second stage reversal. So we're going to be anticipating that the 830 low is not taken out. Drag this over, you have an 850 macro trade as it closes above the 5-minute breaker, right? So that would be your best low risk is after 15-minute, 5-minute liquidity sweep, 5-minute breaker, and then a 1-minute entry. You can see the 850 there. 930 purges, gives us 20 points, and then comes back down, dips into a volume imbalance on the 5-minute. Trades back up. You have a 950 macro trade as it runs up for London high, and then eventually another stop run there. You can't see on the 1 minute, but if you go to the 5, you can see sweeps it, closes above. I apologize if I'm going fast, but can review this later. And then we dip back lower into the order block and the fair value gap right during the 1030, 1045 sweet spot. Entry there, flies up for the rest of the buy side. Even on days, we'll go to a day where there's no news. Here you go. Or we can go to this one. This one's a little bit more difficult as we don't see an 830 news, so we're using 930. We have SMT. So SMT will also qualify us for a reversal, right? If we're looking at ES and NQ, which is kind of the two ones that I'm favoring for the most part. 930 comes up. This black line here purges liquidity above on ES and then closes back below, right? Cycle it over, and you can see here. Here's your 930 Judas, and then it dips back below. We've changed, say, the 5-minute, trades up into 945. That's your low risk. Although it's outside of the macro, we have another entry that's given right in here, right in the macro time short. And then it either continues or reverses / consolidates going into silver bullet hour. So in this case, our drawn liquidity is already met, right? We already dipped into the market maker sell model. We confirmed that. And we're trading back lower into the 15-minute gap, which is your target for the day. And then obviously we just consolidate during silver bullet hour. So if you split these kind of windows up, entry in here, or an entry in here. So you can keep going back. Here's a day where we have 10 a.m. news. So with 10 a.m. news, I like to just wait for the 10 a.m. news sweep. Occasionally there will be entries prior to that, but I like to just wait for 10 to sweep. And then what does that leave you? Well, it leaves you with one opportunity, 10:30, 10:45 to get in, either to confirm the market maker model or as we reverse. So this case, here's your 15-minute chart. Can't see it here. It's definitely difficult. This is a Thursday. But we do, is this actually prior to? Yeah, so this is also prior to NFP. So we're not going to be trading on a day like this normally, but you can still see the model works. We have relative equal lows in here, I guess. You could count that, but 10 a.m. purges liquidity, trades back up. And if you go over here, 5-minute purges it, closes above. We're going to be waiting for 10:30, right? So this case, we just miss a trade completely, or reverses technically up here, but sweeps at the low at 10, trades up. And if you were trading silver bullet, nice breaker in there, comes up, comes back down into the order block, right in discount of this dealing range from low to high, trades back down into discount there, tapping to the order block. I'm at 1021 and then trades up into the buy side, and you can see we'll reverse during this macro in here. We could use that as your shorting opportunity as we dip back lower into the drawn liquidity, which would be this 10 a.m. low. So I'm not going to go through all of them, but I suggest you just go back and backtest this kind of stuff. If you're on stream or if you watched it, take screenshots, or if you just look at this, take screenshots of your 15-minute, your 5-minute, and your 1-minute, and you'll see that every single time, like if you look at all these screenshots, you can see the market maker model in all of these, right? Market maker model with liquidity sweep at 10. Go to random one, 10 a.m. news here. Market maker model over here. Also technically with this, but 10 a.m. liquidity sweep, and you have a 1032 entry as we sweep stops, and then it trades back lower and we sweep it going into lunch, but still to more than 20 points given there. So I'll bring it back over to TradingView. Take questions if you have any. Let me switch this over to, should be able to see. Okay. So looking for an AM model that's going to be your highest probability one. That's typically how ICT trades. If you go and watch his ICT executions, or his Twitter executions rather, you'll see that a lot of his entries are based around this kind of stuff. Either a liquidity sweep at 9 or an 8:30 liquidity sweep, and he's getting in. And if you look at the times he's entering, it's very, very similar to this kind of stuff. Sorry, I missed why you said we are consolidating. Is there a general thing you look for before the macro to know if we will consolidate? So for me, it's a couple things. Obviously, if the drawn liquidity has already been met going into silver bullet, then I'm anticipating some sort of reversal, which can happen. We could sometimes get a reversal at 9:30. It runs up for liquidity going to 10, and then we reverse out of there. So if drawn liquidity is met, or if we obviously are in a low probability day, so like a Monday or before FOMC, before CPI, before NFP, possibly if there's a large overnight move, all those go into that first 30 minutes kind of being low probability. Also, if we are just trading and there's no clear entry, if there's no 5-minute breaker lining up with a 1-minute fair value gap, that's the preferred kind of entry for me, then I'm anticipating some sort of poor macro or forward to reverse potentially. That all just comes with backtesting though, and kind of watching it play out. So if you have access to FX replay or even replay mode on TradingView, you can go and kind of watch, and you'll see what the conditions are before it. But typically, yeah, it's if the breaker isn't confirmed, we're not going to be trading the 50 macro, or if it's just very poor price action, maybe we're like already up at the drawn liquidity, I'm not going to be trading unless there's a clear kind of reversal going into silver bullet hour. No news, no trade. That's not necessarily true. But if you want this kind of profile, or we're using a 9:30 liquidity sweep or an 8:30 liquidity sweep, then yeah, preferably you want to wait until your first day of the week that has 8:30 news, which is your, if you have seen AM Trade's weekly profile, that's also what he's the one who kind of started that. But if you go to each week, you can wait for the day where it has 8:30. So in this case, Tuesdays, we're not going to be trading Monday, but any day after that is fine. But for me, I'm 9:30 days are fine, like 9:30 true open, even if we don't have 8:30 news. I'm still looking to trade those days. It just, we may be anticipating kind of different price action. It could be very quick. It could be delayed in Silver Bullet, where maybe the first 30 minutes are chopping around and then it moves, or maybe it moves the first 30 minutes and then chops around the last 30. So there's different kind of, it just comes with backtesting, but there's different ways you can spot it. And I think it's also good if you can get good screenshots and study for a long time. There's probably only a handful of different profiles, like at an 8:30 sweep, 9:30 sweep, 10 a.m. sweep, and then what kind of price action does in between here, and in between over here, right? There's three kind of windows, mini kill zones in between the AM session. And then if you're really confident with identifying your liquidity sweep, you can be using the time fib, pulling it from low to high and using stuff like that, but that's quite advanced. Probably not necessary either. Let me go through the notes. But mostly it's just not overcomplicating it, right? So liquidity sweep, breaker, macro entry. There's no reason to use every single point of interest. We don't need the new week open. I mean, you can, but you don't need the new week opening gaps. You don't need a change in state. You don't need the lowest entry point. Obviously, once you get used to it, you'll see, like, as soon as this 9:30 entry happens, you can get in maybe at 9:31. Like, if I take a screenshot of the demo trades I took today and send it over really quick. These are just 2 scalps I took on demo this morning. Sent it to the chat. You can see 9:31 went long, and then on this aisle fed also went long. Grabbed 20 points within the one candle. So once you get used to spotting things like this, you can be able to capture basically the turtle soup, the reversal point. The part that you thought was impossible, learning ICT concepts, how do you get the tops and the bottoms? It's just by studying these profiles and using specific times that you know that a reversal is going to happen. Once you get used to it, like if you look at ICT's Twitter executions, let me see if I can pull it up quickly. There's maybe like 60 videos in a playlist. But if you go through and cycle them, there's about 10 or so that I've seen from just looking at half of it, where he's entering within the first 5 minutes of the New York session. And it's just based on this liquidity sweep, and he's spotting it from different time frames. And then obviously using his 30 minutes of, or not 30 minutes, 30 years of experience to target proper drawn liquidity. There's obviously way more stuff you can use to to figure out drawn liquidity and things like that, but it's not necessary. Like, let me copy link. So here's the Twitter execution videos if you want to watch that. But for me, I'm just following that AM guide. So we're using the hourly and the 15-minute as our drawn liquidity. You can see the dip down here. But every day, for the most part, you're going to be targeting either a 60-minute or 15-minute PD array in premium or discount relative to obviously whatever your bias is for the day. So if we're bullish, we're looking for an hourly or a 15-minute for value gap or a liquidity point. Really, only those two, liquidity or an imbalance. That price is going to reach for ending at 11 a.m. Occasionally, it can go into 12 a.m. or not 12 a.m., 12 p.m. But preferably from 8:30 to 11, we want that drawn liquidity, the 15-minute or 60-minute imbalance or liquidity pool to be swept. And if you go back and study Okay, what are we actually doing in between these times? If you go to the 15-minute, you can see each day. Okay, so we're bearish here. Purchase liquidity at 9:30 would be a nice shorting opportunity. But you look at the current dealing range between low and high. Where are the discount dealing ranges or discount PD arrays? Well, we have discount in here, right? We have a gap down here, and we have liquidity down here. So if you look at the time, 10:15, purges it, and then eventually we run back down in here, going to lunch. You can continue to do this. Here is our buy side. Also, there's more over here. Runs up into that in the AM session. Here we have another buy side liquidity pool running into that. Continued, dumps down into a 15-minute gap. I don't know if you can see it down there. But in this case, we're bullish in the AM session, trades up into premium of this range, right? Also premium of this range up here. You can probably split that to even down to 5 minutes, but anyways, yeah, there's a bunch of different stuff, but it's also not, it's important to not overcomplicate. Also using the market maker models, you can use the old selling, old buying, advanced order block kind of theory, where we drag out the previous order blocks from the left side of the chart and use it as support. In this case, as we trade above the old buying here, you don't want to see a candle body placed below, but typically your market maker models are going to have a very similar framework, and it's going to be obviously your pre-market liquidity, which either can be relative equal lows or highs or just a swing point. We're going to come down, form the reversal at a specific time, trade above it on the 5-minute chart, creating the breaker. And then if we're consolidating around 50%, sometimes you can expect a Judah swing to occur. So if I draw this out, you can see consolidation sometimes around here. And then you want to anticipate a sweep of stops and then a continuation up. So that being said, if there's an 8:30 news, say this is 8:30 right here. This is 8:30. And we're already trading up and we got our low risk opportunity. Sometimes what will happen is if this strong liquidity is still unmet up here, 9:30 can bring about another sweep of liquidity where 9:30 comes in, purges this, creates another kind of signature where it wicks it and then closes back above. And then what we can use is the 950 macro to get in there, or even silver bullet to continue up either towards our drawn liquidity or past that. There's your stop hunt, and then we continue. I think we got something similar to that last week or a couple of weeks ago that I know the ICT traded on it. But yeah, not a whole lot of stuff I wanted to cover, just kind of stuff we went over this morning. So if you have any questions, you can put them in the chat. I'm trying to read through, see if there's anything else I want to cover. I'm actually curious to go back and watch the 2022 concepts, 2022 mentorship, and just watch his old videos and see if that's the same exact stuff that we're using in there when those reversals happen and stuff like that. But I do want to point out that it mostly works in the AM session as time goes away, or not as time goes away, as time continues on throughout the day. The setups become lower in probability, or you're not going to see explosive runs. That's why silver bullet hour typically during 8:30 news is low probability, because we already have a lot of volatility coming in, markets working back and forth. Like these runs here are not small runs. These like this from the liquidity hunt to up here, it's 80 points, which is quite large for you probably see it something like this, right? Breakaway gaps. Okay, so breakaway gaps, I like to spot them in a couple different ways. About 3 different ways. I think I said it in the chat. Let me scroll up and see if I can find it. I'll post it in here. So these are the 3 ways I like to look for breakaway gaps. Balance or value gap, And we're leaving it consolidations, which pairs well with balance for value gaps, and then a higher time frame point of interest. So here we have a breakaway gap. I wanted to point this out quickly. We had a gap over here. Well, first of all, okay. So the reason we were anticipating an IO Fed is from breakaway gaps. So if I drag replay mode over to here, what we're going to be spotting first is where are the imbalances on the left side of the chart prior to the reversal. Okay, so we need to fill those first. So we have a gap here. Candle buys respecting that, right? We have a gap here. Now, as these gaps are balanced, meaning we have both buying and selling, especially if there's consolidation around it, the next gap that forms, you'd like to see, typically if there's speed, breakaway gaps form. So if we play this out, we have buying in here now, right? Buying and selling. So this, you could feel comfortable removing this. Not a good idea, but you can feel comfortable. Now this, you'd like to see candle bodies all the way down to this end, preferably actually down to here. Candle bodies down to here. Now sometimes you get a wick down into this, but a candle body is preferred to be placed on top of this gap to fully enclose it, and then down to the order block range, which is kind of your cross reference. If you play it out, there's the wick. Still waiting for candle bodies, still waiting. Candle bodies placed on top. See if we can get one more. There you go. Candle bodies all the way down to basically this point. Now, this becomes balanced, where we have buying and selling with candle bodies. Now, this next gap that plays out as we play it shoots above. And if you look at the second point, consolidation points. So we have a Judas swing and then an expansion out of the consolidation. This gap here, you'd like to see used as a breakaway as our drawn liquidity is met. So either above here or wherever our drawn liquidity is, we drop this down to maybe a 1. You can see we get an IO Fed out of it right there. And then takes out the high one last time, I think. Maybe not. Then it trades back lower. So if we go back and kind of backtest this stuff, let me close this out. Where do our breakaway gaps happen? It's going to be out of consolidation zones. Here's another one where, and higher time frame. Don't forget about the higher time frame, because on the lower time frames, your speed is going to be seen when we're leaving breakaway gap or when we're leaving higher time frame points of interest. So here we have consolidation, right? And over here, move this order block. You have a gap. And it's consolidating in that gap, right? We have lots of selling and buying down to roughly around here. Buying back, and then this is already a bisi. So anyways, drag this back. So we're looking at a balanced price range, and we also have consolidation in here. Trades back and forth, buying and selling all the way through here. Then boom, it closes past the consolidation and leaves the balanced price range. So what do we expect for it to leave? A breakaway gap, right? Breakaway gap there. And if you look at up here too, so like up here, I would be anticipating a breakaway gap to form. Although it didn't form, I would like to see a breakaway gap to form up here. Reason being, we have a 15-minute gap. We have this consequent encroachment level. And if we had consolidated and then left it quickly, you'd like to see a breakaway gap form. But we didn't really consolidate on the 1 minute. If you zoom out, obviously this here is all consolidation. So if you zoom out to the 5, by the way, if you're wondering how I'm resetting the chart quickly, it's just if, like, say we're over here, you just right click on the screen and you can reset the chart value, or you can do Alt R. So if I click on this, it'll reset me. Anyways, go back to the 5. So you can see here we're consolidating, and here's your higher time frame point of interest, right? Consolidation. Eventually we leave the consolidation. This first gap that's formed is your breakaway gap on the 5. And I'm sure if you go to the back to the 1, probably see a little bit better. There's your breakaway gap on the 5 minute. And you can see the first couple gaps in this case as we leave this larger consolidation. Probably it's going to be near the bottom, but this one right here, so be anticipating this breakaway gap up there. So it's going to be when we're leaving most times, the way I'm going to spot it, leaving consolidation or leaving a higher time frame point of reference. So either a gap or a liquidity pool. Obviously, if we have a large thing like this, it's going to be left open as a breakaway. But if you go back, and I'm sure you could see one from yesterday too. Consolidation. We leave it here. We don't close above the consolidation yet, but you can see it's very quick now. Wicks into it. And then we have a breakaway gap that forms, as we kind of extend quickly. But just think of breakaway gaps as why should price leave quickly and not refill it? Well, if there's already kind of a reason for us to go there, so time is important, right? Time is important. And if price has already filled in a lot of pools, or if has filled in its objectives, and there's no reason for it to accumulate liquidity or fill gaps, then it can just run very quickly. It doesn't really matter if it leaves breakaway gaps. It doesn't matter if it leaves inefficiencies, because it wants to get somewhere by a specific time, right? So it functions on taking liquidity, generating liquidity, and filling imbalances. So if there's a specific time that we have to reach our point of interest by, the algorithm really doesn't care if it leaves imbalances that I'll go back and fill. It just needs to complete its objective before the time runs out, right? That's kind of also a way that I think of it. So if it's consolidating and we're approaching the end of our time window here, 11 a.m., since we don't have a 9 or 8:30 Judas, 9:30 to 11 is kind of our kill zone. So by the end of our kill zone, you want to see our drawn liquidity met. So if we're consolidating for the first hour or so here, we only have another 30 minutes for us to reach our point of interest, right? So as we leave the consolidation, this has now all been basically filled in. We're going to quickly spool, maybe just tap into order blocks. And these are the kind of moves you want to be in, right? These low resistance liquidity runs. It definitely takes a lot of time and practice to kind of get used to this. It's not something that I'm as good as spotting, but also if you're I would just say, if you have time, this video, the core content month 1, liquidity runs or liquidity pools, that video is a fantastic video. And I think if you're familiar with ICT concepts, it'll kind of open your eyes to how the algo works on running liquidity out. How do you know that time? How do you know that time to hit our point of interest? I'm not sure. I know what you mean. If you can rephrase it, I'd appreciate it. Is it safer to place stop at sell side rather than fair value gap or order block right? Yeah, if we're looking at today, and if you're trying to get in as quick as we can, yeah, your safest stop is going to be at your reversal point, right? Although that's going to be larger, your safest stop is going to be all the way down here, because we know if that's a true liquidity sweep, we don't want to take this out until there's offset distribution. Like in this case, if smart money is buying up these sell stops, they want to distribute it to an area of liquidity or an imbalance that there are willing willing buyers, right? So up here is where you would distribute those longs, anywhere above old buy side. So yeah, your stop down here would be safe. Obviously, though, if we have 3 repeat areas above that, like in this case, we have this bisi, this sibi, this inversion gap technically, right? And then an order block here. I had my stop as, I don't know where I entered. Yeah, I entered up here quickly, but I had my stop at this low. I was anticipating just a 20-point run. But obviously, if you're entering here or entering at 950, I'd feel comfortable placing my stop below this low, which is be below the entire fair value gap low in the order block. But yeah, preferably it's going to be below an order block. Sorry, below the fair value gap, the 3 candle, just like ICT taught it. Below fair value gap, if it invalidates the fair value gap, typically you don't want to be in there. Or And if it's a low risk entry where you're very close to this swing low down here, then yeah. So if you entered at 950, I think a stop right here would be fine, right? So this is your 1, 2, 3 out of this fair value gap right here. So that's completely below the fair value gap. I think that's perfectly fine, especially if you're using time to enter, right? If we enter at 950 here, entering there, and then it shoots up, that's fine. How do you know that price will hit our point of interest by, for example, 10 a.m.? So if you study the core content month 10 videos, I think it is. Let me type it up here. If we're looking at strictly indices, our true open is at 8:30 or 9:30, right? And then our 15-minute or 60-minute point of interest, if you watch the month 10 AM trends video, I think it is, your liquidity or your imbalance is going to be hit preferably by 11 a.m. That's just how the market works. Either 10:30 or 11 is where you want to see that liquidity ran. So using time as our entry, 9:30, if we swap liquidity and we haven't taken it out by 10, like here, we still have ways to go. We can expect continuation in silver bullet hour. Obviously, if we complete the market maker model going into silver bullet hour, then sometimes we can reverse or we can consolidate. So in this case, same thing here. If we're 9:30 is our true open and we want to see our 15-minute point of interest hit by 10:30 or 11, and 10:30 is right here, what can we assume? Okay, then our high is going to be taken out at least by 11 o'clock or around 11 o'clock. And if you drag this over, especially ran out at 10:45 and then 11 o'clock, look at there, we put in kind of a swing high around there, right? I think if you look at today, it's similar too. High put in of the AM session in between 10:30 and 11 there, right? Right at 10:44, we put in the high and then it trades back lower. I don't think we take out that. Yeah, we don't take out that high the rest of the day. I don't know what the times are specifically for Forex. I assume it's something similar. I don't know the exact time, so I would just suggest you study the core content, but strictly indices, 10:30 to 11, end of the cycle, and then 8:30 or 9:30 is the start of the cycle. Yeah, it's good to study on FX replay. But even if you just look at the 15-minute chart, a lot of these trend ends are going to be at a specific time. Like here, it's 10:45. Here it is 10:45. Here it is 10:45. We put the high in 11. Here we continue into lunch. Occasionally we will continue into lunch if the drawn liquidity isn't met, or if we want to continue. Here the lows put in at 10:15, and then we continue into lunch. 10:45. High put in 10:45. Low put in at 11. Low put in at 10:30. Continues into lunch. Here we have a low put in at 11, and then expands, reverses. High put in at 10:45. You could see it's like clockwork. It's every single day. It's very, very, very predictable when you actually understand what's going on. Here we reverse at 10:45, but we continue to lunch. Here it's a Tuesday, 9:30 Judas, but this is probably the first exception we've seen, right? Low probability, but 10:45 right there. Reverses going to lunch, but that's the first one. Here, 10:45. Here, 11 a.m. sweeps the high right over here, right? 10:45 reverses into lunch. 10 o'clock here. So here in this case, we have a dip lower, and I told you that if the draw liquidities method, we can reverse going into 10:30 or into silver bullet hour. So right at 10, here we're reversing and then trading into what's the high here, 11:45, as you reach in the order block. But 11:15, 11 o'clock, we're kind of retracing there. Anyways, so that's a different profile you can look at. It's not going to draw it out over here, but you can see just by looking at those 15 examples, it's very, very common. And you can use that obviously in tandem with the AM sessions. If price isn't moving at 950 macro, then we know, okay, price is expected to run for the higher low of the AM session between 10:30 and 12. And that in itself can be a model. Maybe you just wait completely for 8:30 to 10:30, and then maybe your model is just 10:30 to 11:30, just looking at this hour, anticipating a run for the AM session high or low, or for it to make the high or low, or maybe it's capturing the reversal that happens. Like there's so many different models you can be using in this. Yeah. When you include time into tape reading, it becomes so much cleaner. It's so much easier to look at stuff because okay, this is what we're looking at a specific time. If it's not there, we just go to the next window. If there's no liquidity sweep at 8:30, we go to 9:30. If there's no liquidity sweep at 9:30, we go to 10. If there's no liquidity sweep at 10, it's a very low probability day. But there's going to be a liquidity sweep at one of these three times. And maybe you don't see it because it's SMT, or maybe you don't see it because it's not as obvious on the 1 minute. That's why it's important to go to the 5 minute and the 15 minute, because it's a little bit easier to spot when that entire 5 minute candle closes. It's very easy most times to, okay, we just purged liquidity and we just close back above. Like it's easier to spot. I would say if you're looking at liquidity sweeps and the breaker, use the 5 minute. That's going to be your tool, right? Don't get stuck on the 1 minute chart and not understand what's going on in the higher time frames, because the banks and everyone operates on the daily time frame and even higher time frames like the 1 hour. So if you don't know what's going on at least a 5 minute basis, how are you going to know where the 1 minute is going to run for? If you're just looking at 1 minute fair value gaps and 1 minute liquidity pools, it's not enough context, right? It's you get focus, you get tunnel vision on one time frame, and it becomes very difficult when, if you know, okay, there's an hourly gap that we're looking for. There's an hourly gap below us or something, and then, okay, we just have to look for a 5 minute sweep, and then it dips lower. These PD arrays in the lower time frames are only going to be respected when we have a higher time frame knowledge. That's why normally I have this 5 minute gap, or this 5 minute chart over here pulled up on the left side for streaming purposes, but then I have another screen on my left where I have the 15 minute and the hourly pulled up, as well as the hourly of ES and NQ. So if you're struggling with the 1 minute trades, or for maybe with a macro or silver bullet, just implement the 5 minute. It's going to be difficult in the beginning, just like it's going to be the training period, the growth phase, the growing pains. But if you're taking trades that line up on the 5 minute and the 1 minute, it becomes much easier, especially if you can anticipate when the 15-minute candle is going to expand, which is what Elijah Pips does a lot of times to trade, is he's looking for that 15-minute candle to expand. If we've seen maybe a consolidation on the 15-minute, or if there's a reason where there's no imbalance, and we expect that 15-minute to expand, then we can use the 1 minute PD arrays, the 5 minute PD arrays to find an entry just for that 15-minute candle expansion. That's why a lot of people for the silver bullet hour will have that giant candle pulled up. This thing, where they have a giant candle pulled up where they can see the entire hourly candle, which, if that helps you to fully understand what's going on, then use it. You have a full reference of that power through the AMD accumulation, manipulation, distribution. I don't use it personally, but I think it's probably helpful. I see a lot of people use it now on Twitter and things like that. So yeah, if you have FX replay, or if you have some sort of backtesting data, or even if you go back and watch old live streams of either me or other YouTubers, see if you can spot these things. If there's no 8:30 news, is there a 9:30 reversal? And then is there an entry that happens after it? If there's no entry after that, maybe at 10:30. Or even just watch, if you have time, watch those executions he has. And look at the executions he has that are in between 8:30 and 11. It's going to be very, very similar, all of them. He's either capturing it right at the liquidity hunt and just scalping, or he knows this is what has already happened and he's just grabbing it. And this is what his son trades, I believe. 8:30, 9:30, 10 liquidity sweep, and then a market structure shift 2022 model, just off that. Every candle is a range AMD happening at every level. Yeah, it's all fractal, right? So if you want to be able to capture the larger moves, why are we using just the 1 minute? You want to know what's going on in the hourly or the 4 hour for us to expand, or maybe not expand. during those times. Let me check the notes one last time. Then we'll wrap it up if there's no more questions or things like that. I would say is, okay, let me check. Oh yeah. So the last thing I just want to cover is what I would say is when we're using fair value gaps to enter, preferably it's going to be in line with an order block. Now that either can be an inversion order block or a regular order block. So when I mean inversion order block, that's going to be looking at the left side of the chart. But if there is an order block in that range, like from here, this low to this high, order block basically at discount right there. And then you can see the gap. Although it is filled, we tap into the order block. If you go back to, I'll go back to yesterday. 10:30 macro trade. I don't know if you can see it here, but there's a gap, order block right below the gap. A lot of times we'll get a wick into there, and that's going to be our optimal entry. In this case, we just wick into the wick. I don't think we touch the candle. Yeah, we don't touch the candle body, but we wick into it. So if we're looking at, if you're struggling with your value gaps and where to enter, because sometimes, at least for me, or earlier in my ICT journey, I'd be like, okay, why is ICT entering at consequent encroachment of the gap? Or why is he entering at the discount end versus the premium end? Why is he putting his limit order there in the fair value gap rather than another spot? Typically, it's going to be because there's an order block either from the left side of the curve or on the right side of the curve that he's referencing. So if we have a quick expansion and there's no order blocks to reference, and we still want to get in that fair value gap, you have to look at the left side. So if we have something like this, and we quickly spool, right? Maybe there's no order blocks in this range up here. Between this high and this low, maybe there's no down closing candles. So what do we look for? Well, we look to the left of the smart money reversal for reference points for invalidated order blocks, inversion order blocks. So if this was a bearish order block originally, and price was to come up and tap into it, right? And you'd want to, as we close below, and when price taps into it, and we want to see respect as we go back lower, right? So for an invalidated order block, we trade all the way through it. So as price dips down into it, you want to see it respected on the previous end, right? So order blocks can be used the same way that inversion gaps can be used. But you can see if we tap into that there, this premium end, you just like to see that. And that sometimes if there's a fair value gap that's, fair value gap lined up here, you can use that with the order block, and then we expand up. And what is this? This is your, exactly, a breaker, right? So your lowest inversion order block is going to be your breaker, and then every single point after that is going to serve in the same kind of way. So as price closes above this can be seen as its own mini breaker. So the price closes above, and then maybe there's a gap right here, or maybe another down closing candle range in here too. Maybe a bullish order block, there's a down closing candle. As price then comes down to here, that's already 3 repeat areas. There's no reason for us to dip below this breaker now. Very tight stop maybe on this entry, and then we fly up. So if you want to learn more about that, there's a separate video. Let me pull it up and send it. It's called Advanced Order Block Theory, I think. Oops. This video right here. It'll make more sense now that you've heard it potentially just from that. But anyways. So yeah, using order blocks in tandem with fair value gaps typically is your best, my favorite method. Obviously, it doesn't have to be a 1 minute order block. It could be a 5 minute order block and then a 1 minute gap, and then use that. Like if we're looking at the 5 minute here, if I remove some of these annotations, we have a 1 minute gap here. And then if you look at the 5 minute, where's our breaker in the 5? Well, we have a low, high, lower, low, trades up. Obviously, we do have an order block here, right? We take this and draw it out. You can see the perfect respect off this as I zoom back in. Order block here, but we also have the 5 minute breaker, the change in state. Then if I zoom down to the 1, enter here. Zoom in. 5-minute order block. Extend this out. And then your change in state. This is your 5-minute change in state. Up here, your breaker, premium of the breaker. You could be entering long as soon as we close above and tap back into there. Anywhere in here. Obviously, you're paying it then with the fair value gap. And it becomes a little bit easier to see. Taps into that. And then we trade back up. It's also important not to move stop too early. So obviously, if we're looking at 20 points, you can grab 20 points, move stop maybe, or just get out of the trade. But if we're trying to capture the entire sell side to buy side move, it's best to not trim stop unless there's a really, really good reason for us to trim. Like if we have a stop run and then a confirmation of a breaker after that, like if in here, if we ran stops, trades back above, confirms this as a breaker, I'd feel comfortable then if the stop was down here, trading it up to this low, right? So up to here. So it's important not to trail your stop too early. Although you can be using the 3 PD array rule, you got to be careful because, like I said earlier in the stream, if we're anticipating a Judah swing, maybe at 50% of the daily range, and maybe you're trailing your stop to this low or this low, we can sometimes see it, purge it, and then revert. So you need, I would say, don't, in the beginning, or if you're new to making your model, don't trim your stop in demo, obviously, but don't trim your stop earlier than you need to, which is something that I struggle with, is I trim my stop sometimes using 3 PD arrays. And then it comes and stops me out and then reverses in the direction, which you've probably seen on streams before, but it's definitely just something that it's difficult. And stop placement and take profit is probably something that no one will ever be perfect at. And that's the one thing that you may fully understand price, but you can always get better because it's never going to be perfect, I think. Can you go over the times and the liquidity sweep again? 8:30, 9:30, 10, and 11. It is recorded, so I'll send the link after. But briefly, you're just looking for liquidity run at 8:30, 9:30, or 10, and then using the macro times that follow it as your entry towards the untapped liquidity. And there's always going to be a market maker model that forms in the AM session. Sometimes it's going to be difficult. Sometimes the reversal will happen at 8:30 and we continue into silver bullet. Sometimes the reversal will happen at 9:30 and we continue maybe into 10 and then reverses again. But liquidity sweep here, or here. And then we're looking for expansion. And then the way you categorize the liquidity sweep is by looking at this kind of signature here, where we have at that specific time a purge and then we close back above. So if this is your sell side here, and we draw it out, you want to see it run the stops and then we close back above where that sell side line is. Okay. But yeah, I go more in depth in the beginning. So once uploaded, you can go back and watch it and you can see the other examples, but hopefully that makes sense. Yeah, no problem. Just was backtesting different AM session stuff and market maker model. Nothing specifically like the other ones, but if you got anything, you can put it with the chat. For another session, just put in notes. Sometimes the market structure is broken and it purge or return to original consolidation, but it makes sense when you're looking at SMT, if that makes sense. No, so anticipating SMTs can help us not get surprised. Yeah, exactly. I think the main one for sure is this 50% rule. If we're looking at a dealing range, this is the one that will probably stop you out the most if you're looking at stuff. Obviously, high resistance is going to be more difficult. But yeah, you'll see SMT at points like here. Like actually, I'm curious to see if it actually happened there. Oh, we did have SMT here. I think that's what we used, right? Yeah, this SMT. So it's good to look for reversal points like at 9:30 if we want to see this as our true liquidity sweep, and ES is running it out and then trading back up. That's going to be SMT. But the one that's going to stop you out the most if you're trailing stops, and the one that you want to study is this section in here. So split your market maker model in half, and look for the consolidation zone that happens around 50%. and look for the Judas swing where it takes out stops one less times and then revert. I actually want to find, there was a really, really good one that happened like 2 weeks ago or last week. Let me see if I can find it really quickly. Here we go. I know this February PA is finally showing through, able to capture some good moves. I'm so sick of the poor PA. All right, see, oh, that's the wrong one. Here we go. All right, click on the stream. Give me a thumbs up when we're all good. Let me pull it up on my OBS as we wait. Everyone see properly? Hopefully. Okay. So here is another example where we're looking at a market maker model, right? In this case, we have 8:30 news. So what are we expecting? 8:30 to 10:30, right? That's already what we're going into it looking for. 8:30 to 10:30 for our model to play out. Here we have 8:30. We have relative equal highs and a purge and close back below on the 15-minute chart. We're also trading within a 15-minute gap. Going to the 5 minutes, it'll be easier to see. Relative equal highs, purges it, closes back below right at 8:30. So we can be looking at a 50 macro, and then obviously the macros after that. But trades back below, we have a breaker in here. On the 1 minutes, it'll be easier to see. High, low, higher high. Your last down closing candle or down closing candle range would be your breaker. But if you can see, look at this, right? So if you're low to high, you split that in half. So right around here, I'm going to say. And we're consolidating right over here. And then 9:30 brings about another Judas swing where we're taking out the high one last time and then trades back below. So if you go back over here, keep that market maker saw model in mind. Here's your high and here's your low. Consolidates around here. 9:30 comes in, you purge it one last time, and it runs up. So we're not anticipating this super liquidity here. We haven't completed the market maker saw model, right? So this dip lowers we're looking for that. But if you go to the 5 minutes, you can see it's a little bit easier, right? Or the 15-minute trades up and wicks back down. Trades up, back into the breaker, back into the old high, sweeps it by 1 tick right there. Trades back lower, back into the breaker, this 1 minute breaker, right? The high, low, higher high. That sweeps liquidity and then trades back down. 1 minute breaker enters there at 9:55 and then trades down into the sell side liquidity right at 10:30 or right before 10:30. And you can see we continue and then reverse going to 11. But 8:30 to 10:30 is your sweet spot. So you can see here, this is what I'm talking about, right? 9:30 can sometimes purge it. So if you were trading this macro, 850 macro, maybe entering short, grabbing your 20, or looking for that full expansion down to sell side, you have to be careful of if we already formed something like this, then obviously if you were entering, then it's fine. But if we are entering here, maybe we're trying to hold all the way down to this sell side liquidity pool, we either have to take it off or we have to make sure our stop is at this high or above it, or above some sort of point of interest where we can accommodate a run up, potential stop out, and then trades back lower, which maybe you don't want to be in that move for it to come all the way up. Maybe you just want to take it off or reposition and wait for 9:30. But that's just different things you can test out and play around with. The last thing I wanted to talk about was the 850 macro, which I think is a good example here. And it's the reason for me to trade this 850 macro is 2 reasons. It's going to be if 830 was sweeping external range liquidity. So in this case, it's not sweeping external range. We are at a high. It's purging right at the outside. So it's at the start. So I'm going to be looking at the 850 macro if it's kind of your low risk opportunity to get in and spool. So in this case, it's a low risk where we've swept out external. We're close enough to this high where I'd feel comfortable entering, scalping 20 or whatever you have. But if you look at today, we didn't purge external range liquidity, and we were already displaced a decent amount by the time the 850 macro rolled around. So that's kind of like the rule for me. Let me pull this up. So if you look here, here's your 850 macro in blue. We zoom out here. Do we have the qualifications we need for the 850 macro? Well, we're not purging any form of external raised liquidity. This is not up here. If we had run this out up here and then came back down, and like we were up here for the 850 macro, then sure, can trade that. Maybe anticipate a 930 sweep one last time. But we already are this low. Why are we chasing price? There's really no reason to chase price when we know we can get a reversal like this. So I didn't participate in this one, although we did have a nice run up into the order block and it sells off into 930. I wouldn't take that. But typically the rule for me is if I'm taking the 850 macro trade, I'm only holding it up until the 930 run. Getting out at 930 and then repositioning or being done for the day. Excuse me. So preferably it's 950 or 1030. 850 is kind of that exception where there's going to be slight rules, different, well, not bending, but like very few occasions. I feel like this macro and this macro are very similar. Like these two are the guaranteed ones almost every day, 950 and 1030. If one doesn't play out, the other one will for sure. Otherwise, this one in here, 850 and the 1050 are situation based, where maybe it happens 1 to 2 times a week max. While these can happen like 3 to 4. I think having profiles for the day and AM session specifically makes it so much easier. It does. I agree. Like having it laid out like this, I think is much easier to spot if we're just looking at time-based stuff. 8:30, 9:30, 10, and then finding the market maker model after that. Because typically after 10 a.m., you'll see the market maker model either have already played out or continuing. And then obviously, if you're looking at silver bullet to just trade, then maybe you're able to frame something around all of this. And then go into silver bullet and use that. But that's a whole different, silver bullet hour is a whole different topic. That's a whole 2 or 3 hour stream that I could go on for silver bullet. It's its own separate thing. Especially if you want to find a trade that happens every single day. To be honest, I don't really know a whole lot, but the video I made 8 months or 12 months ago definitely is not outdated, but there's so much more information I think I could put in there that's helpful. So maybe I'll put that one out soon. It's almost like the bookend, the turtle soup. Yeah, we're talking about the macros then yeah, it's very similar. Or they're watching the turtle soup. It just goes from liquidity to liquidity. Yeah, and the macros, like you said, have a job. So if the job is to accumulate longs again, they're going to be accumulating longs in here and then spooling it towards drawing liquidity or finding another drawing liquidity later to get in. Because think about if you're really looking at AMD, do not forget that accumulation doesn't always have to be consolidation. This is probably going to go over some people's heads, but consolidation is a form of accumulation, right? This is obviously we're accumulating stop orders because there's not enough in the market. But if you've ever heard ICT say we're accumulating sell stops or accumulating buy stops or distributing to buy stops, distribution, yeah, is going to be a lot of times purging liquidity, but accumulation can also be in the form of gathering sell stops or buy stops, right? So sometimes this can be your accumulation. We don't have to consolidate. We don't have to, this is your accumulation, this is your manipulation. But sometimes you can also see it as this is your accumulation of longs. This is your true accumulation of longs, right? How is, at least for me, this makes more sense. Like obviously this is accumulation. They're maybe building in a position, then this is manipulation down here. where they're psyching people out, and then distribution is maybe up here at the buy stops. Obviously, that's how everyone draws it. But for me, while that does work, I also do consider this as accumulation, the true accumulation of buy orders that pair it with sell orders, your offset distribution. Manipulation is our move to the buy stops, and then distribution occurs at or another offset distribution area, right? So here we're distributing into a gap that can be seen, and a lot of times you'll see all those points happen in between these windows. Accumulation at 8:30, distribution at 9:30. Remember, reaccumulation at 9:30, distribution at 10, reaccumulation at 10. Here we have reaccumulation in the form of consolidation. Then we have manipulation and then distribution up into another gap. So don't discount this. And I think if you go back, I'm not going to do it on the stream because we are already an hour and a half in, but just look back at all those days, and then look at the windows from 8:30 to 9:30, from 9:30 to 10, from 10 to 11. And each day, I'm curious. I'm actually going to do this off stream, but I'm curious to see if each of these is your true accumulation, manipulation, and distribution all within these segments. Like if you go back, we'll check one other day. We'll check here. Like here we're accumulating a 9. Distribution's already early on above the buy stops here. So we're just kind of chopping around the rest. Then we have accumulation in the form of consolidation, manipulation down here below the sell stops, and then distribution above here. Anyways, which is very similar to what we saw today. Okay, I'll definitely, I'm gonna write this down for later, but I feel like that's the one thing that I disagree with a lot of those Twitter guys is that they always mark it out AMDs. It's very similar stuff, but the real accumulation is not going to be a lot of times in consolidation. It's going to be the majority of the bulk of the orders are going to be offset distribution. And old distribution is going to be reaccumulation. So if we're distributing shorts down here, or if we're distributing, shorts down here, we're going to be reaccumulating longs, and it's just back and forth, back and forth. Let me actually write this down before I forget. All right. Okay, so silver bullet hours. Oh, let me scroll up here. I think the model I'm having success with is knowing the 4 hour the daily draw and the 4 hour power of 3 with the market maker model after 10. Yeah, that's solid. I like that. Using a higher time frame and then just using a time of day to enter. That's really all you need, right? There's no reason to overcomplicate it. And 15-minute POI with 1 minute market maker model. Yeah, love it. That's solid. Silver bullet hours are second stage accumulation and distribution most times on the higher time frame. It's something I definitely want to study. And that's, if you look at ICT or his trading with Robin's Cup, it's all in silver bullet hour. And he also said about 2 or 3 months before that his second stage of accumulation distribution is his most favorite kind of way to trade. So a lot of times at 12 a.m. Judas is the first stage. Definitely will check that out then. Watching Ali Khan and he said it. Now I'm curious. Now you got me curious. Or even if you look at 2 as well, right? Like if London opened, the 2 a.m. open, if you study that, that also can be accumulation or the reversal point at 2 to 4 or 2 to 3, 2 to 4. I don't know. I don't want to get too into it. Write this down. All right. So, entire thing was recorded. So, yeah, if you can send me the screenshot, I'd love that. Or put it in the general chat either way. Or in notes. Actually, put it in notes if you can get the chance. So everyone can see it. So we'll wrap it up there. Still plan for a backtesting stream on Saturday, although we missed it last week. Either early morning on Saturday, or we'll figure it out actually as we get closer. Saturday or Sunday, one of the two. So I appreciate all you guys sticking around this late into night. If you got any questions, shoot me a DM or put it up in the general chat and ping me. I'm more than happy to help you. Yeah, no problem. I appreciate all you guys joining, even this late at night, willing to learn some stuff and get my gears going. Oh, that's a clean screenshot. I love that. So, anyways, yeah, if you're in tier 2, I'll see you guys tomorrow morning, Lord willing. Otherwise, have a great rest of your night or day wherever you are. And we'll talk soon. Peace.